What is the point I'm trying to get at? IRA, international retirement accounts, these are not investment banks. These are individuals that are storing silver in their IRAs to escape what they may believe will be galloping or perhaps even hyperinflation. Obviously, we know that hyperinflation is the end of all fiat monetary systems, so it is inevitable. Do these people believe that specifically? I don't know. They are maybe boomers, who knows, but they are storing silver in their IRAs. And where are they getting it from? They are getting it from the registered silver supply and moving it over to Delaware, because the other vaults that are the bullion banks, JP Morgan and HSBC, they are losing silver. They are losing registered silver, and it appears that it is being moved to Delaware to IRA accounts. So these are silver stackers, but what is the most efficient silver to stack? Those are the 5,000 ounce bars, or the 1,000 ounce bars, sorry. They are the most economically efficient to stack because they have the lowest storage cost and they have the lowest premiums. So, buy a futures contract, take delivery of the silver, move it to Delaware, and store it in your IRA. That's probably what's happening here. So why isn't the eligible silver supply being drained by silver squeeze? Well, it is. It's being drained from the registered supply to the eligible supply. Am I 100% sure that this is what's happening? No, but the evidence suggests that this is the flow direction. Let's move on. I said that the bullion banks are losing registered supply. We can see here on this chart of the JP Morgan silver stockpile that since silver squeezed this black vertical line here, we had a whole bunch of registered, I don't know exactly, that looks like whatever, 190 million to 150 million, say about 40 million ounces. Now it is 10.6 million ounces. So in total, since silver squeezed, JP Morgan has lost 33 million ounces of silver, most of it registered. Its eligible supply has stayed pretty much static. Now here is the JP Morgan Chase strictly registered supply. Here again is silver squeeze. Vertical line, February 2021. You can see what happened to the registered supply here. This vertical line here in early 2022, that was a 15 million ounce transfer of eligible to registered silver, and that was quickly gobbled up. Now we are down to about 10.6 million ounces of registered silver, around where we were in 2013. Let's keep it going. Now this is the CNT depository. You can see here that we are at a near record low of registered silver here. This has lost an incredible amount of silver, about 32 million ounces. We were at about 33 point something million ounces at silver squeeze vertical line here, and now we are down to 1.38 million ounces. Where are these ounces going? Some of them are going into IRAs. Some of them are going into, yes, the coin markets, but it's going into people's accounts, whether physical silver in a safe or an IRA stored by Delaware or some other depository. And now, why do I think that silver is on the verge of a major breakout? This is purely technical here, and I'm not a big market technician, but I do pay attention to the very basic signs. We have here a clear downtrend since silver squeeze. Silver squeeze hit a high of 30.35. You see here H30.35 on February 1st, 2021. So I put the trend line exactly there at that crossroads, at that point, and we have the trend hit here, the downtrend hit here, established in May 2021 and touched again in March 7th, I think that is, 2022, when we had the whole nickel squeeze fiasco scenario in the LME, and touched again in April 2022. And then we had that big sell-off, and now we're back to the trend line, and it looks like we are just above it. We were above it for about 3 weeks. It wants to break through. It looks like it wants to break through. It looks like it might be breaking through today. And once this trend line is broken through, I think we will be establishing a new uptrend line from a downtrend line. After downtrend lines come uptrend lines. That's how markets work. But why am I specifically excited about an uptrend line being established now? Because we are at near all-time lows in the registered silver supply. While the bullion banks had a lot of silver to sell to buffer the rally since March 2020, they are pretty much out of it now. Well, JP Morgan could bring a lot more eligible silver into the registered market and tag it with a warrant. We'll see if they can even do that, if it even belongs to them. It's unclear who it belongs to. But now, let's move to Japan. We have this article from Reuters, published February 1st, 2023. BOJ, Bank of Japan, bought record sum of government bonds in January to defend yield cap. by Takahiko Wada and Leika Kihara. The Bank of Japan bought a record $182 billion worth of government bonds in January, data showed on Wednesday, underscoring its resolve to defend its yield cap and from attack by investors betting on a near-term interest rate hike. The massive buying highlights the increasing difficulty the central bank faces in sustaining its yield control policy as inflation perks up well above its 2% inflation target. Now, in the context of what is happening to Japanese yields, you see here for about 3 months, I think. Let's scroll down a little bit so we can see the dates. Yes, from around September to December 2022. That's October, November. That's about 3 months. The yield was pushing up against the 25 basis point ceiling, and then the Bank of Japan hiked to a 50 basis point ceiling to try to relieve some pressure on the bond market so they didn't have to buy as many bonds as before, because the theory is if you raise the ceiling on the yield cap, then you have to buy fewer bonds to defend it. But no, that's not what's happening. They have to buy more and more bonds because more and more bond sellers are cornering the BOJ, daring it to buy as many bonds as they can, which they are doing, but eventually they will break. So this took about 3 months to break. This should take maybe around the same time, maybe a little bit less, maybe a little bit more, somewhere around there. But we are bumping up against the 50 basis point ceiling now, and the Bank of Japan is buying even more bonds to defend it. They will fail. And finally, try to make some sense of this. This is a chart from Bloomberg. Traders have never been this bearish on treasuries. Aggregate treasuries, net non-commercial futures contracts. This is the net amount of futures contracts and bonds that traders are short, and is about, 2.5 million contracts now. It's an all-time high in shorts. Could this lead to a short squeeze? It might, but the question is, why is it that if everyone thinks that the Fed is going to start cutting rates now and start its inevitable pivot, and that this 25 basis point rate hike that just happened is the last one, why are they shorting bonds now? Why are they betting on higher yields if they think that the Fed is going to start cutting rates soon? Well, the answer might be that even if they cut rates on the short-term bonds, the market will then sell all of its bonds, all the long-term bonds that remain on banks' balance sheets to the Fed, and long-term rates could still creep higher anyway, which is eventually what's going to happen as the monetary system comes apart at the seams. Is this what they're betting on? It could be. So in other words, they're betting that the Fed will cut rates on the short end, but that long-term rates will continue higher and higher as the Fed loses control of consumer prices. Quite